Last week was our first playoff game, and my plaque psoriasis was so itchy under all my gear. Sometimes just thinking about scratching could take me out of the moment. And then my doctor told me I could get clearer skin with a pill called Otezla.
Otezla apremilast is a prescription medicine used to treat adult patients with plaque psoriasis for whom phototherapy or systemic therapy is appropriate. Otezla can help you get clearer skin after just 4 months.
Okay, ready for the next game. Talking to my doctor about a pill was a total game changer.
Don't use Otezla if you're allergic to it. Get medical help right away if you have trouble breathing or swallowing, swelling of the face, lips, tongue, throat, or arms. Severe diarrhea, nausea or vomiting, depression, suicidal thoughts, or weight loss can happen. Tell your doctor if any of these occur and if you have a history of depression or suicidal thoughts. Live in the moment. Ask your doctor about Otezla. Call 1-844-4-OTEZLA or visit Otezla.com for prescribing info about cost, and more.
Your guides to a really great financial future. Tom and Don are talking real money.
855-935-8255 is our number. 855-935-TALK. And let's see. Let's go to the phones. Pat, you're up next. Welcome to Talking Real Money.
Well, hello.
Hi.
I didn't know I'd get on so fast.
Hey, we don't mess around.
You okay? I'm calling about, I got a reverse mortgage from Wells Fargo about...
Turn your radio down, it'll help.
About 8 years ago. And I got a full, as much money as I could get out of it. And it was for the divorce. My ex told me to get a reverse mortgage so he would get some money and I would get some money because the house needed repairs and he didn't think we could sell it. Okay.
Mm-hmm.
All right. So
now.
Yeah.
Now what's
Is
the...
it my turn or yours?
It's yours. It's yours.
Okay. What it is Wells Fargo has sold my reverse mortgage to Champion Mortgage.
Mm-hmm.
And by doing that, all of a sudden, my excellent credit went down to way below. And I have worked real hard since the divorce to have good credit.
Well, wait a minute. Why did it go down?
Because Champion Mortgage does not list that my reverse mortgage is an open mortgage, I guess, or closed mortgage, and they refuse to put it into the Equifax. So as far as everybody's concerned, I don't own a darn thing.
Well, I'm looking up Champion Mortgage online, and boy, people hate them. No, they are almost universally despised.
Yes. So why did Wells Fargo set me up with this terrible, terrible place?
For money? For money?
Yeah, well, all right. Okay.
Yeah.
But the thing is, now they sent me a letter, Champion Mortgage, and I have to send this back, giving their vendors my insurance, property maintenance payments, and any other information that I can give them. And this is a house. I don't live in an apartment or a condo. And so now I have to have property maintenance payments. And if you don't make them, according to Champion's good reputation, they charge you for every time they come out and check on your house.
Mm-hmm. Well, again, they're allowed to make sure that the house is maintained because they have an interest in the property. So
I know that, and Wells Fargo did too. They came out when I got the money, because the idea that I got the money was to put on new siding, to put on a new roof, and and also do my apartment. Okay, so I did all that. And so they came out, and I did the best, like a 50-year roof and the cement siding. I mean, I didn't do a bad thing. I did really upgrade.
Sure.
Now, I live right on the water, right across from Alderbrook. so I have a good piece of property.
Okay, now I guess I'm trying to understand what you're, because you see, here's the deal. Wells Fargo had a right to sell it. It sounds like they sold it to a really bad company.
Please. Yep.
And you are stuck in the middle, but they can still require that you certify your occupancy, that you certify that you've maintained it, and they can inspect. And by the way, they can charge you if they inspect.
Yes, and I didn't
up to, but from what I read, it's up to $60 approximately.
Yeah, well, I called Wells Fargo, and they said Champion was supposed to honor their former
their agreement. Yeah, but good luck.
And they were supposed to go to Equifax and tell them I have a home and do all the things that Wells Fargo did. But I don't know about the inspections, how many, because according to their reputation, they can do multiple in a month.
I can't imagine that it would be worth their while to do multiples because they don't make enough money off of those. I got to tell you, if they're dragging their feet on credit reporting, if you think that they are behaving outside of the contract, and because of their really bad reputation, you have a couple of options. You can get your own attorney, which is too expensive and silly. Or you might want to write a letter with your complaints to the state attorney general and ask them to look into the company, because there may be others who are also asking for the same thing. The other people you should go to is Housing and Urban Development, because HUD manages these reverse mortgage lenders and servicers, and you might want to file a complaint with them. It looks to me like many others have with Champion, so you might want to join the parade and battle them as much as you can. Let's see. Oh my gosh, no, here it's repair inspection. Property inspection is $15 to $60, but repair inspection can be up to $820. But is there anything that's needing repair?
My boathouse, but I'm going to do that this year. I mean,
well, then that's what I would do. No. But when you repair the boathouse, send them receipts for the boathouse repair. Then you've repaired and you sent them the information.
Now, do I have to do it to their specification and time, or my own time and specification?
Well, you run into the non-conforming property clauses. And I don't know, it doesn't say that I'm trying to find it on their website, but I'm not finding it. You can also take
myself. It takes me a little bit.
Yeah.
It takes me a month to do some jobs.
Well, and that's what I would tell them. I would send them a note saying I'm aware.
But a little painting, I'm just too cheap to hire it.
Well, I don't blame you. Then if there's something that needs send them some pictures of the house. Say, yes, there's a little painting that needs to be done here. I'll have that done in 30 days, and I'll send you a picture of that. And I'm working on the boathouse. I'll have it repaired in 6 months or a year.
Oh, I could do. Oh, okay. Because I'm thinking I have to do that right away. Well, I'm still trying to find
I would inform them.
I fixed it all last year, but the product failed, so I have to redo it. So
I would absolutely inform them that you're aware of it, that you're working on it, and give them some sort of a timetable and tell them you will include receipts and photographs of the work, and that should probably ease their mind. And I wish you well, Pat. Thanks for the call. Good luck with fixing the property. 855-935-TALK is our phone number. 855-935-8255 is the phone number. And you get a free 2-year subscription to Real Investing Journal when you call with a question.
Tom and Don are talking real money.
If you're sick of investing through an insurance agent or a stockbroker and you're in the market for a fee-only advisor who charges truly low fees and uses a scientific approach to building portfolios for your risk tolerance and need, you should check out Vestory. Tom and I started this firm, and it is devoted to educating everyone, total transparency, clarity, low fees, and great service. If you're looking for an advisor, you ought to at least take a look at us at Vestory.com. That's Vestory.com. Or give us a call, 800-386-3004.
For your real life and real future, Tom and Don are talking real money.
You do need to be careful with reverse mortgages and read all of the disclosure stuff, because there's a lot that you have to do to protect their interest in the property. 855-935-TALK's our number. And Lee, you're next. Welcome to Talking Real Money.
Thank you, Don. I appreciate it. Both you and Tom have a face for radio, so it's a great show.
Thank you.
Quick question. Father passed
You have no
away
idea how
year.
good I look on the radio right now. You have no idea. I look good. I'm telling you.
I've looked on the Vestory website. So.
Okay. All right. Thanks.
Yeah, there you go. I gotcha. Seriously, Father passed away late last year, and he's with his maker now, and. Trust had to do some tax considerations, and they said, how would you like to take some disbursement now, yourself and your siblings, or pay a bunch of taxes on it? And I said, yeah, we'll take some disbursements now as trustees. For the previous caller, I have done my emergency fund, and having a couple of credit union accounts, I'll go ahead and park some emergency fund money there. But looking at about $75,000 or $80,000, like to invest short term, say a couple of years or so. And what you suggest, have a small money market account with Vanguard now. And
okay. So you say a few months. What is the eventual purpose of that in the next couple of years?
Retirement. I'm 65,
but the question is, I guess.
Yeah.
Are you going to take it all out in 2 years?
No.
Okay. So it's a long-term investment. You're just not sure how much risk you want to take with the investment, right?
Correct.
That's where we have a solution to the problem here. Go to TalkingRealMoney.com and take the risk quiz. RISQUIZ. It's free. Mm-hmm. We don't bug you. We don't call you anything. Take that. That's going to tell you what your risk tolerance is. Then, with that money, go to Vanguard and break it up between two funds. Just two.
Sure.
Life doesn't have to be very complicated. The two funds are the Total World Stock Index Fund and the Total Bond Market Index.
I'm writing notes as I speak. Do you have the ticker on both?
Yeah, let's see. The total, I know the VTWSX is the Total World Stock Index. For some reason, I have a terrible brain for tickers. I've never had a good brain for, but I'm going to look it up because I know the VTWSX and the Vanguard. Come on. And also my fingers sometimes don't hit the right keys. Vanguard Total. It's amazing how much I write and still type as badly as I do. Total Bar. VBTIX. VB as in boy, TIX as in tickets. And build a combination of those two depending on what that risk tolerance says. Again, the higher your tolerance, the more you should have in the equity side. The lower your tolerance, the more you should have on the bond side. If you're a very conservative investor, then maybe 20% in the VTWSX, the stock index, and 80% in the bonds. If you're aggressive, reverse that.
Fantastic. So the bond fund, again, Victor Baker TIX, and the World Fund, the VTWSX.
Yep. And then go to TalkingRealMoney.com, take the risk quiz. It takes about 10 or 15 minutes, max. Probably 10, And it'll give you a report, and you'll go, oh, now I have a clue how much risk I can take. Because it's not a matter of timing anymore. It's not like you're going to say, oh, this $80,000, I'm going to spend it tomorrow. That would be foolish. If it's for retirement, you're going to gradually spend it over the course of years, so you need to have it properly invested and then rebalance. Thanks for the call, Lee. I appreciate it. 855-935-TALK is our number, 855-935-8255. And if you call, we'll send you a magazine, Real Investing Journal. In fact, we'll send you 2 years' worth. But you got to call with a question, and you have to do it today.
Tom and Don are talking real money.
We mentioned 855-935-TALK, 855-935-8255 throughout the podcast. But you need to know that you can call that number 24 hours a day, 7 days a week. Leave your question, and those will be answered in special Talking Real Money podcasts that will appear on this particular site in the future. So give us a call, 855-935-TALK, 855-935-8255.
Reality radio for a really great future. We're talking real money.
The real key to investing, it isn't picking the right thing. It's knowing you first. You have to understand you. 1, what's the purpose of the money? 2, how much risk are you comfortable taking? Because you need to understand those things before you can make a decision. It's important that you understand you and your risk tolerance and stop looking for the best investment, because there's no such thing. There is no investment for now. What's the right investment now? The same ones that were a right investment a while ago. It's based on you and only you. You want less expensive, well diversified, no games, no gimmicks. You don't pay extra, because paying a lot of money to have somebody pick what's going to happen in the future is a waste of money. It's been proven over and over and over again. 855-935-TALK is our number, 855-935-8255. And you can call that number 24 hours a day, 7 days a week, and we'll answer your questions, your recorded questions, on the new Talking Real Money Quick podcast every week. Timothy, you're next. Welcome to Talking Real Money.
Hello, Don. How are you this afternoon?
I am well, sir. What can I do for you?
I got it. You kind of just answered my question, but
okay,
I'm going to make it short. I listen to other investments programs during the week, so I run across this guy on another station. He's pretty good, and he was very critical of Vanguard. And here's the reason why. I want to run it by you. He was saying, instead of investing in stocks where a fund where they buy all of them, where you risk the chance of buying some that aren't good, as well as buying some that are good.
You should only buy the good ones.
The best stocks. He said there's an app.
And I know exactly who you were listening to. Dave Ramsey. Dave Ramsey is full of.
Not Ramsey.
Oh, not Ramsey. Who else? Who?
Gunther.
Gunther. I don't know Gunther. Oh, it sounds like a Ramsey comment. All right. Yeah, there's some guys. There's a guy on the radio. There's a guy on the radio who calls those of us who believe in just buying Vanguard hold and hopers. Hold and hopers.
Okay.
But it all goes back to this ridiculous premise that guys like Gunther and Dave and many, many others want you to believe. They need you to believe that there are people who are actually smarter investors than you are. But you need to understand something about investing. To be a smart investor, you have to know the future. You have to not guess it. You have to accurately, 100% know the future. Now, Timothy, you're a smart guy. Do you know anyone who knows the future?
No, I don't.
Yeah. That's the problem.
Here's the analogy he used, Don, real quick.
Yeah.
He said it's like the NFL draft. The worst teams pick first, for a reason, so they can get the best players. So why don't you, as an advisor, get together to pick the best stocks, the best stocks, like someone would analyze the best players.
Here's the problem with that. They don't have a stock draft. On any given day, let's say that there is news out that Starbucks is going to make a ton of money in the next year. It comes out on CNBC in the morning, and you rush out, or your expert rushes out and buys Starbucks stock. What's everybody else doing at the same time?
Yeah,
they're all rushing out and buying Starbucks stock. There's nothing.
Right.
The only way a professional can actually make more than the market itself, because bear in mind, the market is made up of tens of millions or hundreds of millions of people making transactions every second. The only way you can beat them is if you cheat.
So there's no way you would have known that Amazon.com 20 years ago was going to perform as well as they have today.
As a matter of fact, I could show you hundreds of analyst reports who said that Amazon thing is a really foolish idea. He's doing nothing but losing money. How's he ever expect to make money? As a matter of fact, still to this day, Amazon is not as profitable as you would think given their price. But the reality is, and I can show you study after study after study after study that shows that professional money managers fail. I mentioned that report on hedge funds. Hedge funds, the best of the best, made less than half what the S&P 500 made.
Tom and Don are talking real money.
In addition to the Talking Real Money podcast, I also do another podcast that's very popular over at Apple Podcasts. It's called Money 30. Every day I try to educate and inform you about money in a brief 2 to 4 minute podcast. So check them out at Apple Podcasts or all the other podcast services, or at money30.com.
Your guides to a really great financial future. Tom and Don are talking real money.
There's a paper out there. You might want to look it up. It's kind of cool. It's called The Arithmetic of Active Management. It was written by a Nobel Prize winner, Professor William Sharpe from Stanford. And it basically says that it is impossible. It is mathematically impossible for active mutual funds or active money management to beat the market in aggregate, and even individually. There is no evidence, none. And it's up to them to provide the evidence. There's no evidence that these experts are doing anything to add value. As a matter of fact, there is a lot of evidence to the absolute contrary. I mentioned at the top of the show in the very first hour that a new study of hedge funds that was just released found that the average annual return for these very expensive, very difficult to get into. You got to be a qualified investor with millions or billions of dollars to get into some of these hedge funds. These hedge funds, on average, returned 0.81% for the first 6 months of 2018. Now, that's not necessarily indicative of anything, but what makes it interesting is the fact that just a dumb investment in the S&P 500 would have made you twice that much, over twice that much, 1.67%. And in a bad market, these professionals claim they're able to do better. But it's not like picking in the draft, because when you're buying stock, you think of it this way. You're going to buy a stock in Apple. You're going to buy stock in Apple or whatever, or Amazon or Starbucks. You're going to buy a share of stock because you're sure it's going to go up like crazy. The expert told you it would. Where are you going to buy that stock? You're going to buy it on the open market where millions and millions of shares are being traded every day. You're going to buy it from someone. And that someone from whom you're buying it is probably an institution, in other words, an expert. That expert is selling the stock. Wait a minute. If it's so good, why are they selling it? Because the market, given all of the information and all of the people participating, the market is fairly good at accurately pricing securities on a second or even nanosecond by nanosecond basis. You can't beat them. And what's the even better old saying than the NFL analogy? If you can't beat them, join them. Be the market. Don't worry about beating the market. The few experts who occasionally demonstrate that they might have some skill, and by the by, they are very few and far between. Can you tell this is one of my hot button issues? Very few and far between. Oh, by the way, the number is 855-935-TALK. The very few who do actually show some skill don't necessarily repeat that skill going forward. And do you know how small that number is? There were two different, very broad studies done, 20-year studies done of all of the equity mutual funds in America. Looked at all of the performance of all of these funds over a 20-year period. This is thousands of funds. Two different studies. And both of these adjusted the results for luck. Because bear in mind, at any given moment, if you say a stock's going to go up, you might be right, you might be wrong. There's an element of luck in anything like this. So they take out the effects of luck, that bell curve. When they eliminate the effects of luck, because you always expect that a certain number are going to underperform and a certain number are going to outperform, and you can chart that. You take that out, and these studies found that between 0.6% and I believe it was 2% of active mutual fund managers demonstrate any kind of potential skill. That's just dozens to maybe 100 mutual funds. And then other studies have shown that those who have done well in the past rarely repeat in the future. So even if there was an active manager out there who had skill, the odds of you finding that manager going forward are so tiny as to make the effort of no value. Why bother? If you can't beat them, you join them. And the reality, folks, we waste so much time trying to beat the market that we beat ourselves up. Investors, average investors, or even expert investors, are terrible at making even what the market provides. They end up doing like the hedge fund managers, half of what the market, and that's not even the market. The S&P 500 is only a fraction of the market. Investors don't even get what the market provides. Take what the market provides. Over the past 90 years, it's been like 10% per year. There, I'll get off my soapbox. 855-935-TALK is our number. And Mary, you're next. Welcome to Talking Real Money.
Hi.
Hi, Mary. What's up?
Well, I'm about 3 to 4 years out from retirement, and I'm contributing actively to my retirement funds. But my question concerns that change from active savings to withdrawing money, and how I should maybe set myself up, so that, to change. I'm a pretty conservative investor. On a scale of 1 to 10, about a 3 is my risk level.
Okay.
And so
then that's
I'm looking for ideas.
Your portfolio today, whether you're in accumulation mode or withdrawal mode, your portfolio should always, at any given moment, reflect your risk tolerance.
Yeah.
And need to take risk. For example, if you didn't have enough money to give yourself the income, it's time to start looking at your assets and determining what they can provide for you in terms of income in retirement. And if they won't provide what you truly need, then you may have to take more risk than your tolerance would otherwise dictate. But your risk tolerance should always be the driver, now and on into the future, because your portfolio really shouldn't change much from accumulation mode to withdrawal mode.
Okay, so you're suggesting that, I have an IRA that's invested in a variety of funds, and I've been pretty happy with its performance. So it wouldn't necessarily be appropriate to change that just because I'm retired.
No, not at all, because as long as you have an income plan to use these assets, and that's one of the places where people get into trouble, is they don't have a really good withdrawal plan. And you need to start working on that, either with an advisor or on your own. You might want to get the free Better Retirement Guidebook that I've been talking about. Just go to retirebetterbook.com and get a free copy of it, because that'll help you build that plan. There are little worksheets in there and all kinds of stuff, and help you figure out that income plan. Thank you for the call. I really do appreciate it. And remember, you can call the number 855-935-TALK 24 hours a day, 7 days a week, and we'll answer those questions on the podcast during the week, which is at TalkingRealMoney.com.
Tom and Don are talking real money.
Keeping the podcast breaks as painless as possible is my goal. That's why I want to very quickly tell you about the only magazine I've ever heard of that is 100% real investing all the time. There's no business news, no speculative advice, and certainly no lifestyle stuff. It's called Real Investing Journal. I publish it every quarter, and you can get 2 full years for only $25 at realinvestingjournal.com. That's realinvestingjournal.com.
For your real life and real future, Tom and Don are talking real money.
Wow. We have given away a lot of guidebooks today. Holy mackerel. Hey, we've got a new big retirement event that we're going to be a part of. It's called Retirement Roundtable by attorney Rick Gregorek, and we're a part of it. And that is coming up in August at the Meydenbauer Center, and tickets are now available for that all-day event at TalkingRealMoney.com. TalkingRealMoney.com. You'll get information on both planning for the legal parts of retirement, building a portfolio, and drawing out income when you retire. So check out those tickets at TalkingRealMoney.com. And if you want a free copy of the Better Retirement Guidebook, go to RetireBetterBook.com.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately, consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. That should keep the lawyers happy.